Hello, everybody, and thank you for joining me for this month's Wholesaler Toolkit. The hot topic of discussion this time around, the conversation that I feel like most of you are having about extending duration, especially with all the cash sitting on the sidelines. My name is Kyle Gears, and I am a senior customer success manager on the institutional side. So I'm working with asset management distribution teams day in and day out to leverage our platform to have better conversations with advisors. I want to thank you for joining and note that questions can be sent through the Zoom module using that Q&A feature. We will also be sending out a recording after we wrap up, most likely tomorrow. And we'll also post the recording to our YouTube channel for those who might have missed it or would like to rewatch. Now, I'm sure there's a few of you on the line that do not currently have access to YCharts, so I at least want to give a brief introduction of what we do for asset managers. Ultimately, YCharts is going to act as a sales enablement tool, especially having an impact while you're meeting with advisors. There's a lot you can do within the platform to prepare for meetings and do some post-meeting follow-up, but most of that value comes in the meeting, being able to dynamically shift timeframes, pull up different metrics, make dynamic comparisons on the fly, and really tell the story of the value that you provide when it comes to your products. And that's what we're going to focus on today is how do you build out that story, especially around this whole duration conversation. As far as today's agenda goes, we're going to cover how to identify certain products that could potentially be good adds to a portfolio in the place of cash. I'm also going to help you illustrate the historical performance of those products, especially during periods where rates have been paused or have been cut. And then we're also going to talk a little bit about how to leverage some of our other resources within YCharts to help make that story come full circle. So with that said, let's go ahead and jump into the platform and walk through a couple things that I think are going to be extremely helpful that you have access to as far as our resources go. First and foremost, just because the conversation primarily revolves around the Fed and their next move, I want to go to our dashboard, which is our homepage on YCharts or our landing page. If you're not there, you can always get there by clicking the YCharts logo in the upper left-hand corner. That'll always bring you to the dashboard and bring you home. I want to point out one of our templates, which you can find in the Manage section in the upper right-hand corner. So there's a little gear icon with an option to click on Manage. You'll see some different panels on the left-hand side. I want you to go to Dashboard Templates. And this is a group of templates that we've created here at YCharts, higher level macro type overviews. But the one that's most timely is the Fed Policy Tracker, which you'll see in the upper right-hand corner. All you need to do is click on it and select Create, and it'll create everything that you need on your own personal dashboard. Since I already have it up, let me go ahead and click into mine and just walk through why I think this is beneficial or important. First and foremost, you have a chart with inflation, both the headline number and the core number. You can interact with these charts or even click into them to open them in the fundamental chart tool. But obviously, a lot of folks still focused on inflation, especially the Fed. So how is it trending? You can stay on top of it. As soon as that print comes in, it'll update on your dashboard. 2-year versus the Fed funds rate in the upper right-hand corner here. Once again, you can interact with this and see how the 2-year has trended versus the Fed funds rate. As they say, the 2-year is a great proxy for Fed funds, especially if we're looking forward. So what is the current relationship? Then as we scroll down, you're going to have things like unemployment data, another piece of information that the Fed is locked in on. You have a cumulative CPI chart here on the right-hand side as you sort of click through the time frames. What are prices doing over that 3-year period from a cumulative standpoint? Up 18.2%. As you continue to scroll down, CPI breakdown, food, energy, housing, consumer versus producer price index, and then the Fed's mortgage-backed balance sheet versus housing prices. So a lot of the data that ties into the Fed's decision making and this whole conversation about duration. The other resource that I want to share is related to our fund flow data. Here, I'm going to go to the support tab up at the top of the page in the black toolbar. You'll notice toward the right, under our featured content section, you have access directly to the fund flows reports. Now, a lot of folks are familiar with these, use them every single month, very insightful as far as where assets are moving and what's happening. Different variations of the report. Basic fund flows report highlights the top categories and bottom categories for flows. The strategy flows report basically zooms out and gives you all major equity and fixed income categories. But I want to turn your attention to the visuals deck, which I think can be extremely helpful, because what we do here is a little bit different than our standard reports. We create this deck and focus on more aggregated data at a higher level, which is easier to digest. So if you click on it, it'll download the PowerPoint for you, and you're free to use this in branch meetings or individual one-on-one meetings, but it provides you with the deck, and there's some really helpful information. Now, as far as the data goes, the fund flows are updated on the 15th or around the 15th of every month for the previous month. So here we're actually looking at September's flow data, which was released in October. Next week, we'll have all of the October data in release, so keep your eyes peeled for that. But I just want to make a couple quick notes on this particular presentation or a couple of the graphics. First and foremost, the big conversation right now is all of the assets flowing into money markets and coming out of active or passive products. So what we're looking at here is Q3 asset flows by broad category. Once again, you see a massive amount into money markets. However, this orange bar here shows you that there's actually money moving into fixed income. So almost 35 billion in assets went into fixed income products, funds, or ETFs in Q3. And ultimately, we're just breaking that down into different categories or asset classes to figure out where that money is actually moving. So here, skip down to another slide, Q3, and here's a breakdown of actual categories that saw inflows. You see core bond, core plus, ultra short, which has a lot of those T-bill products, or those T-bill holdings, long government, intermediate government, and so on. So we kind of get an idea that a lot of the money is going into the middle or long end of the curve. So once again, wanted to point this out because I think it's extremely helpful to communicate and at least set the stage or build up to the story that you're going to tell. So speaking of the story, let's go ahead and transition into that. And what I'm going to do is open up the fundamental chart tool. So I'm going to go to my tools drop down, hop into the fundamental chart. And I've done a lot of work with folks. So some of my clients might be familiar with this, but everybody always asks, how do you build this out? How do you determine the timeframes? How do you add economic data? Because really what we're trying to do is we're trying to build a story around how certain products react in different rate environments. So what I'm going to start with in the security section, I'm just going to use a couple ETF proxies. I'll use AGG, everybody's favorite fixed income benchmark, and then just to capture the long end, I'm going to use TLT, so 20 plus year maturity treasuries. And if you're adding ETFs, one thing you'll notice is oftentimes it'll default to price. I'm actually going to remove price and use total return. Oftentimes we default to price just because folks will want to see on a 5-day or intraday what that product's actually doing. Whereas this is more of the long-term conversation. So I'm going to use total return, which includes dividends and distributions reinvested. I also want to make sure that data format is on normalized so I can see the percent change or the actual return. Now here's where it gets interesting. We're going to start adding economic data to really build this story and communicate to clients, because I feel like a lot of folks that I talk to, a lot of wholesalers I talk to, they're telling the story, but they just don't have visuals to back it up. And it's hard to gain any ground when you don't have visuals. And the visuals, in a sense, provide that aha moment or allow the light bulb to go on. It's just easier to digest and understand. So I'm going to add in the 10-year treasury rate. The easiest way to find it is to type in 10 space rate. You'll see it under economic data. Ultimately, what we're doing is we're breaking out all the different product types or data types here on the left-hand side. So I'm going to go ahead and choose the 10-year treasury rate. You don't want the real treasury rate because that actually adjusts for inflation. We want the standard treasury rate. You'll see there's two options. Actually, it doesn't matter which one you choose. It's the same data point. We just have two different sources. One comes from the Fed, one comes from the Treasury. So we'll go ahead and we'll add that in. You'll notice it's a little goofy, gives us a different number than we'd expect. More on that shortly. Because what I want to do next is add in the Fed funds rate. So if I type in Fed funds, you'll see a list of results. There's two that I usually stick with. One is the upper limit, which is what flashes across the screen when the Fed makes their announcement. The other is the effective Fed funds rate, which is ultimately the aggregate of the overnight rate that banks are actually using. The big difference between the two is the effective Fed funds rate actually updates daily, whereas the upper limit is only based on the Fed's decision. So anytime that the Fed funds rate changes per the Fed, it's going to update the data. So it's less frequent. But I always like to stick with the upper limit because that is actually what the Fed is announcing. So now we have the data on the chart. A couple things I like to do to clean this up. One is to panel the layout per financial metric. So bottom left-hand corner, single panel is what we currently have, which is everything on one chart. If we panel per financial metric, it'll keep performance of anything that we have on the chart together as far as funds, ETFs, and so on. And then it splits out the econ data. So it cleans it up pretty significantly. Next, we want to go to the annotate function because we want to get these formats back to normal. First, we'll find the 10-year. We're going to click on the annotate option and we're going to force the original data format. That's first and foremost our key thing here. I don't want to see the percent change of the 10-year rate. I want the actual 10-year rate or the original. Then I'm a big fan of using the min-max lines, especially in these conversations, because it automatically plots out the high and the low for you and tells you what those were based on the period you have selected. Area chart gives it a nice aesthetic. It shades below the line so you can easily see moves. And then just to make things easier from a visual perspective, I'll flip the color, change that to blue so I can differentiate between the econ data and performance of my ETF proxies. So I'll go ahead and change that. Do the same thing for the Fed funds rate. Change the color, min-max line, force the original data format, and then area chart. So now you can see the formats a lot different. We can actually see the rates. We can see the highs and the lows. Everything's lined up perfectly. Also failed to mention earlier, I'm just using these ETF proxies, but think about this from your fund family's perspective. What is the best opportunity as far as adding duration for clients? Use that in this example. We also have the ability to add in cash. So a lot of times what I might use BIL for 1 to 3 month T-bills or something like a Schwab money market for that cash proxy. So now the next step, how do we build the story? How do we find our timeframes? This is something people always ask me. And really what it comes down to is just extending or expanding the chart and looking back historically. So if I click the 10-year time frame, looking back, we might try and find historical periods where the Fed has paused and cut. The one that I've been using recently is back here in 18 and 19. So you can kind of hover over the chart and you can see the value and obviously see where rates peak and where they start falling. So this is where I'm trying to pick my spots and help build out that story. And you can also narrow that date range down because the longer the date range is, the less frequent the data points will be. So you might not be able to pick that exact spot. So if I hover over here, November 8th of 18, I want to go from when rates peak to near their bottom or a 1 year holding period or whatever the story is. This is completely up to you. I'll go up and make that adjustment in my date range box to be able to capture that and then tie in the endpoint. So, where do I want to end? So we can see, here's Fed funds, here's the 10-year. Do we want to capture the low? Do we want to say, hey, let's assume we hold for a year? But what I've done recently is I've said, let's just call it till the end of 2019. So obviously we had a bunch of funky stuff happen in 2020. So we'll just take that, for example, for that particular time frame. Now, this is something I've shared quite a bit because it catches the story that we're looking for. Granted, rates were half of what they are now. You still have the same sort of fundamentals in a sense in falling rates and appreciation on intermediate to the long end of the curve. So now what we have is we see rates peaking here with this blue line and falling. That was before the Fed even made their last hike and paused. So ultimately what we're trying to communicate is the market prices in whatever the Fed does before they make the announcement or the decision. And ultimately we're looking at the upside that you have in the middle of the curve to the end of the curve or long end of the curve. So we have AGG, TLT, and a cash proxy here. Now you might get some objections from this point. Well, one, rates are half of what they are now in this scenario. And you might try to communicate the opportunity in price appreciation. So what we can do is we can actually add a financial metric for NAV. If I add that in there, we now have total return. So this is the income reinvested versus strictly price return. So this is just the price of the underlying bonds. And you can see the difference between the two and how much of an impact falling rates have on price appreciation for those underlying issues. So that's one part of the story I think that's important to be able to communicate or convey. And then the other might be timing. This is a perfectly timed trade, let's call it. Chances are I'm not going to be buying the perfect spot. But per the chart, the earlier you get in, the better. If I were to make an early move and there's still another, let's call it 25 basis point hike or whatever the case is, what does that look like? So if I jump back a couple months and let's say, hey, I'm 3 months early, call it August 8, 2018. Well, yes, there's going to be a little bit of a drawdown or a little bit of downside there, but ultimately the upside pays off significantly. And I think that's another big conversation being had right now is, how much downside is there really going to be, or how much potential is there for rates to go higher? But the opposite direction, if they move lower, there's going to be a lot more upside there, relatively speaking. So once again, this is a great way to communicate that. And then once you have the story built, you can save it down. I can come up to my drop down in the upper left-hand corner, go to save as, and call this one Fed pause puts 18 to 19. However, I can easily remember it or identify it. And now I have that saved in my fundamental chart tool. So if I ever need it, I go to tools, fundamental chart, open it up. And that's going to be in my saved file folder here. Once this template is built out, you can look at other scenarios. So if you wanted to go back and look at other dates, we can go back and take a look at treasury rates or Fed funds rate. The reason it goes back so far is the 10-year, we have almost an unlimited amount of data on the 10-year versus some of these products, inception dates, and some of the Fed funds data. But if we wanted to kind of pick our spots and say, well, hey, let's go back to 07, maybe 07 through 09, well, we can go out and look at that date range, start here, and then maybe clean it up from there and look at what happened as far as the Fed funds rate goes, its relationship to the 10-year, and how some of these products performed. Basically drilling down and doing the same thing to capture that period and help tell that story. So I think this is going to be one of the key items in having those conversations, is just being able to communicate rates, how they moved, and how certain products performed. A couple more quick things that I wanted to share before we do wrap up. One was the ability to customize our new stress test tab. I'm sure a lot of folks have seen stress tests already, but we recently released the ability to add your own custom timeframes. So the charts are great, but you're only going to get one at a time. So you'll have to kind of file through different periods. However, I'm just going to pull up AGG here. If you go into your stress test tab, which to get here, you pull up a product and then click on the tab stress test. You have these pre-built timeframes, and I'll add TLT in again. So all these pre-built timeframes, you can add a competitor here and see how a certain product performed. But we have a new way to manage them. You can actually pick and choose what you want to see, or even create your own brand new timeframe. So if you want to create a couple different scenarios or timeframes that cover multiple periods, you can do that. So if we call it Fed pause cut, and it'll show the dates for you, so you don't have to worry about that. We wanted to choose the exact same time frame that we just covered. We'll go 11/8/18 through December 2019. Add stress test. It's going to put it at the bottom of the page, but you can actually bring that up toward the top. You can move these around. You can also remove any that you're not interested in. But this is a great way just to have these timeframes at the ready and being able to compare against other competitors. And the last thing that I want to share with you, or the angle that you could potentially take, because it's been very difficult to get that cash off the sidelines and out of a risk-free 5+%. Tools, portfolios. This section, you basically think about adding an advisor's total model. However, you can also create blends. So if you wanted to say, well, hey, let's blend an intermediate product with a short end of the curve product, or you can even do 50-50 intermediate product with cash, just to show the upside or the impact that it might have. You name that portfolio, you just call it 50-50 AGG/cash or whatever your product is. Make sure you change that benchmark to the ag, and then add in those products. So if we go AGG 50%, we can use a money market proxy. We also do have a cash option there for the portfolio. Update it, save it down. That's going to look, act, and feel just like an individual fund. So you can use it in those different scenarios. I actually created this 50-50 blend of AGG and BSV, which is Vanguard short-term bond ETF. If I wanted to drop that into a fundamental chart or any one of those scenarios, I'll have the ability to do that. So I can open a chart up, basically the one that I just built, and use that blend. So here is that initial chart that I created. This is that 50-50 blend, and it shows you exactly what the performance would be of those two securities blended together. So I hope this was a helpful session. Should be much more armed and dangerous going into the duration conversations. A lot of interesting stuff happening out there in the market, especially after last week. So I'm hoping this is going to help move the needle a little bit and help our clients bring assets in, or help at least educate advisors and their clients on the opportunity or opportunity cost when it comes to duration. As always, if you have any questions, please feel free to reach out to our support team, support@YCharts.com, or reach out directly to your customer success manager. Should have all their contact information on the website. You can always access it through support and contact us, direct email, phone number, meeting link. But as always, we're here to help. If you have any follow-up questions, don't hesitate to reach out. Hope everybody enjoyed the session today. Have a great rest of the week, and we'll see you next month.